Well, good morning, ladies and gentlemen. Welcome to this live ODDO BHF Asset Management webinar. So thank you very much for your time and taking the trouble to actually join us today. My name is Nigel Sillito, and I'm going to be the moderator of today's event, which should last between about 30 minutes. And I promise there'll be plenty of time for questions. So please do use the chat box if you have any questions. So I will interrupt our experts today with some questions, but don't worry, there will be plenty of time at the end. And you'll be familiar certainly with one of these gentlemen, that is Reza, who has been in the Middle East for many years and recently joined ODDO BHF. And he is VP and Head of Sales for ODDO, residing here, of course, in the UAE. And our main spokesperson today is Bryce Prunas, who is Global Equity Fund Manager for ODDO BHF Asset Management. He's actually been in the capital markets for some 20 years, and he's actually specialized in technology throughout. And he spent a total of 11 years with ODDO BHF. So welcome, gentlemen, and welcome to everyone who's part of this very exciting webinar, which is obviously on a pretty topical subject, which is artificial intelligence, which I will abbreviate to AI from now on. So before we actually get to the meat of it and focus on Bryce and this particular strategy AI, maybe Reza, you could just quickly introduce ODDO BHF Asset Management to those who aren't maybe too familiar with your business.
Sure, thank you, Nigel, and thank you everybody for joining us this morning, which we hope will be a very interactive morning alongside Brice and Nigel. So ODDO BHF is a Franco-German asset management company, actually a private bank and asset manager. We manage north of 100 billion euros. The shareholder structure is 65% belongs to the ODDO family, 25% belongs to the employees, and 10% to institutional investors. We cater quite an interesting platform where we have fundamental equities, which are driven by our PMs. These are conviction-based PMs who do stock selection through mutual funds. We have a very strong fixed income franchise, obviously quant equities as well, which are mainly in Germany, another multi-asset platform, and at loss of course, our private asset and private debt markets, obviously the private asset market. And as Brice is here, we also cater some thematic strategies, one of them being our AI. So basically our clients are around 60% institutional and 40% wholesale. So this is in a nutshell, Nigel, what ODDO BHF stands for, and you know, we are a boutique manager and convinced that, you know, we're doing the right things.
Great, thank you very much. So turning to you, Bryce, ODDO BHF Asset Management obviously manages a number of thematic strategies with AI being integrated in the investment process. One of the first strategies to be launched was an AI thematic strategy. So if you could just explain how you use, how AI is used in the investment process, but actually, why not first, let's look at the universe for AI. I think that might be a good starting point. So I'm just going to share a screen. So maybe because AI is clearly related to tech, there are lots of different definitions out there. Maybe you could explain what you consider to be the definition for AI, and I'll bring up one of these slides.
Thank you, Nigel, and good morning, everybody. So our AI definition stems from two approaches. The algorithmic approach of our partner, data science partner, and the fundamental approach of AI that the management team has written in a white paper dedicated to artificial intelligence. So for us, AI is a silent revolution that is going to affect each sector of the economy, but not with the same magnitude. As of now, we do believe that the sectors where AI is more prevalent are technology and healthcare, which are, by the way, the two largest sectors of our fund. But the motto of our fund is to be a multi-sector global fund where we want only innovative companies based on AI, and whichever the sector might be. So AI, as you see on that chart, is a mega trend that encompasses several subthemes like big data, automation, machine learning, deep learning, or cognitive computing. But AI is a much broader trend and theme than any of these sub-themes taken separately. What I want to share with you today is that 20 years ago, I saw internet coming as a tech financial analyst. And what I feel is that what we had ahead of us with artificial intelligence is much more industry shaping, value creative for the next decade than what internet had been over the past 20 years. And on that slide, we share a forecast from Gartner that forecast for the next 5 years a compound annual growth rate of AI of 23%. On top of it, Gartner does expect trillions of dollars that is going to be spread in the economy thanks to AI. So it's really unprecedented, I believe. And the way we approach it, and we are going to develop that further, but we have built a library of 250 keywords. This is the work of 18 months, 250 keywords that for us define the thematic of AI and that are going to be used to find the companies.
Great, thank you, Bryce. Maybe we can now go to your investment process. So just please bear with me while I move to the next slide. Okay, so maybe Bryce, could you just describe your investment process and the universe that's actually available to you?
Thanks, Nigel. Indeed, yes. So we have a global approach for this fund. It's a global equity fund that can be where we can find company in every sector. So basically, we have a first challenge on the left part of the chart is to consider an investment universe of 4,600 companies. And for that, we have signed an exclusive partnership with a leading data science company in Europe, because the only way for us to contemplate and to analyze 4,600 companies and to find the best 300, as you can see here, is to bring a mathematical answer to that. And here we use machine learning in finance in that step one. Basically, our partner with their algorithm are going to analyze 4 million data per day on Bloomberg. And I talk here only on step one on unstructured data. So semantic analysis, sentiment analysis, and trend analysis are going to be considered. So basically, the 250 keywords that we have defined for artificial intelligence are going to find companies. Algorithms are going to read each article with these keywords and the name of the companies listed under the same article. But the beauty is that algorithms are going to capture the sentiment of each of these articles and translate the sentiment on a score. And we are going to do in parallel trend analysis to be able to capture golden nugget and small companies below the radar screen at the same time. So at the end of the day, on that step one, we are going to have the best 300 companies based on the number of occurrences between keywords and company, based on the sentiment. And when you look at the sentiment, you start alpha generation, and based on the trend analysis. At the end of this step one, we have 300 companies in the world under the theme of AI with good sentiment. And then the game starts over at the beginning of the step two, where we are going to use a totally different tool, which is a quantitative model with 4 factors: valuation, quality growth, momentum, and size adjusted from the risk. And we are going to ask to that step 2 to take the best 60 companies out of the 300. And once we get these 60 companies at the end of the step 2, each company is analyzed. There is a fundamental sanity check by the portfolio managers where we check ESG, adequation to the theme. We check again valuation against growth and whatever is relevant before pushing the investment button. So you can see it is a very comprehensive investment process because on the step 1, we fight against our cognitive limitations. With algorithm, we are able to contemplate more companies than 20 buy-side analysts on the world. In the step 2, we fight against psychological bias, like fear, for example. And in the step 3, we have a very experienced team to check every company before investing again. And in this 1, 2, 3 process works every quarter, and we have a rotation of the portfolio one per year. And in between each quarterly rebalancing, there is a constant risk management by the fund manager, and we can also sell a company at any time in case of exceptional events that would change the investment story of any of the company in the fund.
Thank you, Bryce. Actually, we've just had a question from a family office in Saudi. They're saying, where does the human element come into managing this strategy? What's your role?
It's a fair question, Nigel, because I often hear people saying, so you don't do anything? So in fact, against all odds, I would say human is everywhere. First of all, I manage a team of 9 people, 6 data scientists and 3 quant people. In the step 1, I present you with the machine learning. I see my role as a guarantee of the investment thesis of the fund. So I check each of the company in the top 300. And if I spend a lot of time reading research, meeting companies, attending conference, and if by any chance I see a company that is not in that 300 that I see very relevant, I make sure I leave a fair chance to the process to capture this company. So, you know, it's working always of which sector the top 300 is capturing, which continent. For example, when we launched the strategy, I reckon we didn't have enough China, and constantly we have improved the exposure to China. That is for me the place in the world where we find the most advanced AI company. In the step 2, when you work with a quant team, you have to, quant model is very reliable, but you have to make sure that the data, the structured data that come in the model is flawless. So here is my job of financial analyst. For every company we can invest in, I check the EPS growth, the sales growth, the momentum. If there is not something that is just inaccurate, because on Bloomberg, sometimes analysts do not do their job enough fast and something like that. And in the step 3, of course, there is a truly human sanity check again, where we check everything that needs to be considered. So you see, I would say as a conclusion, the portfolio manager 2.0 using machine learning, using quant, is in fact everywhere, in spite of all these very powerful tools.
Right, thank you. I'm pleased to say other questions are coming in, which I'll come to, particularly from Shekhar. So before Shekhar answer your question, do please keep sending them via the chat line. Why don't we now look at the current portfolio of the strategy. So again, I'll just share a screen, so please do bear with me. So yeah, everyone can now see the portfolio breakdown for the strategy with these 60. So maybe Bryce, you can just touch on this very quickly.
Sure. So there are 60 companies in the portfolio all the time. They are equal weighted 4 times per year. Equal weighting has been a portfolio construction we have been back testing for 4 months before launching the strategy. You can see there are 12 sectors, but in reality, 2 sectors are prevalent, technology and healthcare. The process is very nimble because when we launched the strategy, we had just 3%, end of 18, we had just 3% of healthcare. And 6 months before the major sanitary crisis of COVID, we started to have 20 to 25% of healthcare. By geographies, you can notice that exposure to North America is most prevalent, but Asia is constantly on the rise. I would say at the expense of Europe, that is now less than 10%. And unfortunately, my continent is not where I find the best ideas for AI. And in terms of, it's an all-cap fund, as you can see. Right now, only 11% small and mid, but that used to be 46 last year when the market was bull. But once again, here, the process is pretty nimble. At a time where indexes are very high, we protected naturally the things by reducing small and mid caps. And something that is quite unusual, and it's important, is the bar chart on the left side, bottom left side, where basically the price earnings of the fund, which is the price earnings of the 60 companies constituting the fund, is the same as the MSCI World. And it has always, which is the benchmark, by the way, this has always been the case since we launched the strategy. That also means that we do not invest in companies very expensive, but that also means we do not invest in companies that has the fastest growth. We do not care. Valuation matter as well for us. And we do not invest in companies that are loss-making. We are underweight in GAFA stock, for example. We are not in the usual suspect of Tesla and Netflix because they are loss-making. So we are very differentiating in the market in terms of approach versus peers.
Great, thank you. Well, do keep sending the questions, please. This is from Shekhar, says thank you for this. He asks, how does AI work during stress scenarios, extraordinary events? How proven is this model? And what about the model error? I know it's a lot of questions, but if you can just quickly answer those questions, it'd be really appreciated.
So first of all, when you analyze the performance of the funds, now we have 20 months track record. What is striking is that we tend to generate most outperformance in a stress test situation. And we got a very relevant stress test this year that started 19th of February and finished 24th of March. And at that time, we beat the MSCI World in the course of these 4 weeks by 310 bips, which is really unexpected for a fund like AI fund. And basically, you remember what I said, we managed 6 months before the major sanitary crisis to get large exposure to healthcare. And it happened that the model was predictive enough to invest in a company like Gilead, that was the first company to bring the remdesivir to treat COVID. 6 months ago, we invested in one of the 3 leading companies for vaccine. It was Pfizer at that time, and it's still the case, by the way. Remember, we have 60 holdings equal weighted. We have the same price earnings of the market. We are not in leverage company because of the quantitative model we use. We have companies with clean balance sheet. So in a case of a stressful market, that matters. So many factors point to a defensive portfolio in a category, I would say, high beta. Your question, Nigel, about the track record is very important because we use in the step 2 a multi-factor quantitative model that has 10 years history at ODDO BHF of beating the indexes. So not only did we use an existing with long track record quant model, but we backtested that model. We improved that model by changing some ratio. We customize that model to the strategy because we have a large team of experienced people, and we have improved a lot of things there. Did I forget one of your questions? Did I cover it all?
I think you have. There are some other questions from this gentleman, which I'll come on to later, actually. Let's take a case study because one of your holdings, which I believe you just sold, actually, Massimo, is a US medical device firm with offices, I believe, in Saudi and UAE. So forgetting, that it's just been sold, what actually attracted you to Massimo in the first place, and how does it fit in with the AI theme? And would you actually buy the stock again at a later date? And let me show you the background to this company. So let me just bring up the Massimo slide. Here it is.
Thank you, Nigel. So I told you we tend to have now 20–25% of healthcare. And within healthcare, we have one pocket that is medtech. And our medtech investments are in the US. And the typical company I want to find in the fund is a company with high entry barriers, high return, low competition. And by the way, what is the link between, and Massimo is completely below the radar screen. Massimo is a company you will find in a US small cap portfolio. So we found this company with algorithm. You can see on the left part of the chart. For example, the company was screening with some of our keywords, monitoring sensors, signal processing, and then the company scored very well in the step 2 of the quantitative on the quality growth factor. As it is a small company, also risk volatility adjusted from the risk also score well on the size, and momentum was good. Of course, value was not so good because it's a fast-growing company. So, by the way, why medtech into an AI fund? Because medtech today in the US, the topic are non-invasive technology or robot surgery. In the case of Massimo, it is non-invasive technology. During COVID, we have heard a lot in the US, in France, in Italy, about the lack of ICU beds. And when you see an ICU bed, you have usually a monitor like the one you have on the top right side, related to a little device on the top part of the finger full of sensors, where you can, for example, measure a lot of things in your human body, like the oxygen in your blood, without being invasive, without using the spine. So it is a typical usage of AI in healthcare we like, is analyzing the data of your human body, being non-invasive, and by the way, it is a real progress in terms of pain for the humanity, and we have a lot of sense. So in terms of investment, you're right, Nigel, we sold Massimo last week, but the contribution to the performance of this company year to date has been fantastic. I think it has been a +40, +50%. But prior to this year, the company, I think, has multiplied its share price by 6 in the course of 5 years. So it's a real compounder. But the real acceleration of sales related to COVID lasted 5 or 6 quarters, and now we start to see capex of ICU bed in the world reducing. So our model decided it was time to sell, but it's typically that kind of company. In many sectors, we want to find really small, specialized, with high returns, high competitive modes, and below the radar screens.
Thank you very much. Let's just look at the interest there is now in this strategy, because I was quite impressed by the growth in the assets. So again, let me just bring up another slide, so please bear with me. So yeah, this, maybe you can talk around how it started. Did you get some internal seeding, and what the growth in AUM has been?
Yes, so we started end of 18 with 5 million seeding. And I would say interest has been constant on that fund. One of our pride has been one large institutional in Europe, that institutional investors that trusted us from the start. So you see the little bump around the month of April. And then it has been constant expansion, yes, because it was supported by performance and by the innovation of the process. And also investors, I think, I've been sensitive to the quality of the performance, with an information ratio of the fund of 1 since inception. I want to say 2 things about the assets that can matter for our listeners. One, ODDO BHF group has invested significantly in the strategy, showing alignment of interest. And the management team speaking with you today has 0.3% of the fund as well, so showing that we believe in what we do. Since the beginning of the year, we have collected 50 million euro, which shows that maybe that thematic of AI is in everybody's mind, and people see the potential interest of being there. And I think also it's related to the fact that it's a global fund. Global equity today has a lot of sense because being on a company like Tencent or Alibaba, for example, which is the case, it's hard to find that kind of company in European equity.
Great, thank you. There's another question that's just come in from someone in Abu Dhabi, an investment manager. Where is the potential for AI to transform and drive growth across the Middle East?
Okay. Thanks. So if you take if you take a country like the Kingdom of Saudi Arabia, I think they have launched a national level change management program driven by the rapid adoption of digital technology. They call it a 2030 vision program. So you see programs, I saw a lot of smart city program like the one of NEOM, that is aimed at using data analytics and AI in all aspects of modern life. So they are really big national and government-led project based on AI, smart city, facial recognition. And what I like in that kind of region is basically you tend to start from scratch. So you have a propensity to use the most modern technology from the beginning. So I think there is a lot of potential.
Thank you very much. If anyone has other questions, please do send them over. Maybe Reza, we can come back to you. How do investors actually access this AI strategy?
Thank you, Nigel. So in the Middle East, the easiest way, obviously, is through the Allfunds platform, where the strategy is registered. There's a US dollar share class. But I would say for easiness, just contact me by email, and I will be able to help on that front, of course.
Great. Well, thank you very much. I did say we'd keep it to about 30 minutes, which we've managed to do. I think it's always best to keep these webinars quite short and punchy. So Bryce and Reza, is there anything else you'd like to add before we close this event?
Just a quick word about the performance of the fund. Since inception, the fund has been up 40% after cost, which is an outperformance to benchmark MSCI World of 8.7%. Year to date, the fund is up 7% after cost, which is an outperformance of 380 bips to MSCI World. And for example, in July, that has been the 10th month in a row where we beat the indexes. August, we did underperform after 10 months of outperformance. But really, the philosophy of the fund, to be sure I am understood, is it's a quality growth investment fund under the theme of AI, global equity, and we want to beat the MSCI World everywhere with a low vol approach, with a control risk, and the quality of a performance matters more than everything else for us. So information minimum 1 is also what we fight for.
Great, thank you. Reza, is there anything else you want to add?
No, it's fine. Thank you.
Great. Well, I appreciate everyone's time today and the questions. If you have any more, please do contact Reza. Of course, we will have a recording of this for those who weren't able to attend. So thank you, everyone, for your time.